Hey everyone, welcome back to finally a new episode of the Squawk Box. It's been such a long time since last time I made this episode, and I just want to say it's good to be back in the market to provide a financial evaluation of the current situation as well as the money market fund. So with that being said, let's turn our attention to the screen. Right in front of me, I have the chart of different holdings. So these are the main holdings of our current portfolio, starting with Apple, Google, Microsoft, Netflix, Tesla, Meta, Nvidia, TSM. And then from here, we have Disney, Visa, Advanced Micro Devices, Berkshire Hathaway, Archer, Vertex, Joby, and a couple of small cap stocks. So I set the chart in four different time periods. First, we have an intraday, and then we have a year or year to date. On top of that, we have a month and as well as 5 years. From micro to macro perspective, just to give me a little bit of a different flavor from different timeline. So typically, this is how I get started, and then I'm gonna dive into the actual chart. So coming from trading floor background, that's actually the first job I had after undergrad. This is usually the bread and butter that we do on the trading floor. Every day we go into the trading floor, we start with the market. For example, let's start with SPY. SPY has been doing pretty well past couple of months. Right here, we have a daily candlestick that's going all the way from November 2023. So from 2024 here, we're looking at about 476, 480. Once we break this resistance, we are heading into uptrend. So that's the trend we're talking about. So far, we're going strong, and I personally expect this trend to continue. Now you want to break things down a little bit. You want to go into different markets. Now, obviously, this year, the GenAI is a hot topic, so you want to start with Microsoft. Now, this is the situation for Microsoft. As you can see, it's one of the leading names, and it's also one of the top holdings in the S&P 500. We have a little bit of a breakout here. Let's put a vertical line, and I personally believe this will ignite Microsoft going to a new era and a new high from here. Potentially, we might be looking at $500 in the next quarter. After Microsoft, the next stock you want to look at is Nvidia. As one of the hottest name out there, Nvidia is one of our holdings, and pretty much once they break this trend, here we have a bull flag or whatever you want to call it, a wedge pattern. Once they break this wedge pattern, we are pretty much heading to a whole new level, right? From all the way back to $46. I think this is before the stock split all the way to right now, we are at around $125, $130. I personally believe this will continue to go up. Next level we're looking at is $150. That is the resistance line there that we are going to try to hit. And of course, amongst all the large names, you don't want to forget Google and Amazon. Let's start with Google. Google is also in an uptrend. It's heading to all-time high. Nothing else to be said there other than it's doing well. Next name is Amazon. Amazon is, of course, doing well. Starting from season 2, I read their annual report. They're doing a phenomenal job integrating GenAI into their online platform, Amazon Web Service, considering that out of all the tech companies, Amazon might be the last one that implemented the GenAI platform. I personally interviewed there, and I think their Copilot is on trend to doing something great. Potentially, we might be talking about a complete voice command, voice controlled online platform for developers to really build out some cool applications and really to drive the e-commerce space from a cloud as a platform perspective. So as a go-to name on the cloud platform, Amazon is definitely one of the big names out there you want to consider. And then I will probably move on to financial sector. I will start with XLF. This is the index for financial sector. As you can see, financial sector is hit a little bit of a roadblock here. We are looking at a wedge pattern here. It might break out somewhere in the next week or two. I personally don't know. I don't think it's going to be that easy, but the trend indeed showed that, right? This is still in uptrend. We're still doing well coming out of last year. Last year, we have this giant correction. We finally broke that in November 2023. So right now we're heading into an uptrend. I think there's going to be a breakout sometime soon. So let's see if financial sector can deliver us that good news. Personally, I have Visa, a big fan of Visa. I think it's doing great things, and they're actually in the financial technology sector. They're having a little bit of a correction right now, but I think there's going to be a breakout sometime here. So here I have a small downtrend with a smaller correction. If they're able to break that, then I think they'll be able to push to new high at around 290 or potentially $300. Berkshire Hathaway is of course staying strong. This is a pretty clear bull flag. It's a textbook trading. I don't even need to draw any lines. It's a pretty clear bull flag. And you can kind of expect the breakout sometime here. And entering into Q3, we might see this name going to for $30 or potentially higher. Now, outside of technology and financial sector, you might also want to look at Tesla. Tesla recently had a new breakout. Let's put some trend line. I broke this smaller resistance, and I personally think this is going to lead to another round of uptrend. Will it get there? That's a question for the market to verify, but we did see a couple of moves in the past week, and personally, we're involved in this name as well, and it definitely gave us a couple of momentum and some confidence that this stock can come back up to all-time high. Potentially, we're talking about $300 or even $400 in the near future. And then on top of that, people really like gold. A couple of my friends are really into gold, so let's take a look at gold. The gold sector did really have a large breakout section. Let's see if you draw a resistance line like that around $200, $220. From there, it really is a breakout that you don't see every day. So this is actually a breakout. So if you look at the weekly chart, this is actually a breakout all the way from the dawn of time. And the gold is actually at all-time high, and it's gonna aim for all-time high here. Here we have a little wedge pattern that could potentially be leading to a bull flag. We might be looking at another breakout sometime soon. So let's see how this name does. Personally, we don't have any exposure in the gold sector, but I do believe this name is inching for all-time high. So the next sector you want to look at is healthcare. I'm one of the managers out there that will always keep an eye on healthcare. Even though we have not had any exposure in the sector, I do believe it's an interesting sector to keep an eye out. Considering that we just broke this long correction all the way from 2 years ago, let's draw some resistance line. That's the correction I'm talking about. So here you clearly see a wedge pattern, and we're breaking out. And we're breaking out here around January this year or December last year, which some might say that, hey, this sector might finally be waking up and could potentially lead to all-time high. And that's true. I do believe there is a huge potential for the entire healthcare sector to go up even higher. Personally, I think United Healthcare is one of the leading names in this sector, along with a couple of insurance names. Even though we're not personally exposed to any of these names, I do believe they're the driver for the sector. Disregard if you like the names or not. With that being said, one last thing I want to mention is we're going to enter into Q3 as well as Q4, which leads to more volatility. And personally, I'll probably expect a little bit more correction. And that's, of course, because of the political volatility in the market. Let's go back to S&P 500. If you look at the weekly chart and you can go back in a couple of years. So in 2020 November, that's a previous election. Let's put a bar there. And then somewhere down the road, we have the election in this year. If you go a couple of years before, every 4 years, you can actually expect something like that. As you can see, the past couple of elections, disregard who's the president, the market has always been going up. And we indeed saw a little bit of correction. This is due to COVID. I personally think this is a separate event from presidential election. If you look at all the presidential election and where that lead to, I do believe the entire market is still inching up. Now, I think a bigger reason of that is due to the financial structure of how the money works in this economy, in this country. And although president candidates reflect certain value in the economy, they are not the only driver in the economy. If you want to predict if the price go up or down, you need to go back to the classical supply and demand curve and to analyze where's a trader looking at, what is the price range they're looking at, and specifically, where is their buying power. For example, we can do the math for the buying power. On average, the average American makes $50,000 a year. That would be 50,000. And then you can times 300 million American citizens. And then let's say you have 10% 401k contribution, and that would be 1.5 million dollars because this 300 is in the units of millions. So if I turn this into million, that means I'm adding 6 zeros behind it. That would be the amount of buying powers in this economy. I don't think any selling power is even close to this number in the economy. So that being said, simple math tells us that the market will continue to go up. So I think that probably contributes most of these uptrend. And personally, I have not seen any reason to not believe in that just yet. With that being said, hopefully you enjoyed the episode, and hopefully this episode sheds some light of the financial evaluation from our perspective. Thank you for watching. Subscribe and like.